Hey, welcome back to Fully Invested Fi. Today is January 30th, 2026, and today is episode 11 of the full Paycheck investing series. So, as usual, I'll show transparently the full flow and thinking of investing my full paycheck and how I pay bills and live out of my brokerage account. So, I'm doing this all uninterrupted and in one take, so forgive any mistakes. So as usual, first, just a disclaimer, this video is for entertainment and education purposes only. I'm not a financial advisor, and nothing here should be taken as financial, investment, or tax advice. I'm simply sharing my personal investing journey and documenting my own results. Investing always carries risks, especially when using margin, and you can potentially lose money. So don't copy what I'm investing in blindly without understanding the risks and doing your own due diligence. No returns are guaranteed. As usual, we'll just kind of have a quick look over of a monthly flow chart that I use to fully live out of my Robinhood brokerage account and invest 100% of my paycheck. You're basically just going to see this whole chart play out in real time in today's video, essentially, right? So as a refresher, on this channel, I invest 100% of my income transparently. So at least 10.8K every month into growth and high yield ETFs. I've stopped using a traditional bank account to live entirely out of my brokerage account. I use cheap margin of 4.5% to bridge the gap between my bills and my dividends. And my goal is to never sell a share, ideally, forever compound my assets across my growth and high yield income and have my monthly dividends eventually exceed my monthly expenses. If you want an in-depth breakdown of this video, check out the video at the link at the top right here. And yeah, let's just dive right in. So if we pop over to Robinhood, so another red day today. This whole week has been like a bit of a red week. So I was kind of honestly excited to get to today just because that makes for good buying opportunities, right? So overall, yeah, I just kind of finally dipped into the red in year to date. It was doing good year to date. I was outperforming for a bit, but now in the red. But today there's probably going to be a bunch of deals here. So even if we look at like my investment sheet here, so I can kind of see a couple things that have dipped in the red this week with the this week's dip. So like Hood's in the red here. And it was actually holding up, yeah, because it had a big rally up yesterday of 10%. Cost is back in the red. Take-Two has a big red day today, which we'll get into. That's in the red. And the high yield ETF stuff, that's all kind of staying similar and where it was before, but a little bit redder. So yeah, let's just kind of start investing. So as usual, we'll just send over the full paycheck to the brokerage. So I want to move this from my spending account to my individual. So yeah, take note of withdrawable cash here. This will go up once I transfer that, right? So let's do that. Cool. And then also I'll bring up my calculator here just so we can kind of like start minusing stuff out as I invest. Cool. So if we check this, you can kind of see that this went out by the exact amount. Buying power will have gone up by double the amount of the paycheck that went in because you always kind of get double the buying power there. So that's what it's looking like here. And yeah, and first things first, we'll just start investing into growth. So typically I do $2,000 into growth, right? If you paid attention to the chart earlier. So normally I would do like 1,500 into an ETF and then 500 into like a single stock just to kind of keep things a bit more balanced and kind of build up my anchors. This week, given the dip, I just want to make a special case here where I'll invest into 2 single stocks actually for my growth side of things. So yeah, like I mentioned, so like Hood here is in the red and Take-Two's in the red. So 2 majorly ones that are in the red on the single stock side of stuff. So if we take a look at Snowball's handy find a dip tool here, so if we look and kind of confirm that, yeah, Take-Two's down in the red here, Hood's down on the red like this past week, but if you look in the last 50 days, it's down a lot. So like year to date, really. Let's take a look at these two. So like, yeah, so for Hood, it's down quite a bit. So almost like 10% year to date. And Microsoft as well had a pretty big dip yesterday on concentration worries and into their OpenAI investment and also circular financing and all that. So this is down 10% as well. So like I was honestly debating Microsoft today, but yeah, I'm already pretty heavy in Microsoft, right? Like as far as my allocation. So I like have like $8,000 in them already. That's like 2.9% of the portfolio. So I don't want to put too much more right now into them. So yeah, I think I'm landing on Hood and Take-Two, right? So Take-Two is an interesting one today. Like this one dipped because it looks like there was no major news related directly to the company. The only thing I can find is that yesterday Google did launch its Project Genie AGI project, essentially, where you can basically like put in prompts and generate little games and stuff like that. I watched the video honestly, and like being in games, like it was a little impressive, but also it's like the quality of the games isn't going to be anything crazy. Like there's no way that like the stuff that's generated there will rival something like GTA, which is like super AAA, right? And super high quality. Like I could see this like applying to like little games that people do like solo and things like that. But a lot of it's going to be kind of like AI slop, and we'll kind of have a hard time matching up to really handcrafted stuff, right? If anything, like I could see AI working for game makers to like help accelerate people that know how to make games and make them even faster and make them be able to make stuff even better. But someone that has like no experience at all, that I have a hard time seeing that. But yeah, so absolutely, I don't see the justification to lose 10% of their value for that because of Project Genie here. So just want to capitalize on that dip, and I still long-term bullish on Take-Two and like how well they're going to do with GTA 6 in the long run. Again, like if we pop over to Take-Two stock here, right? Like really, if we zoom out to max, like this is when GTA came out roughly in September 2013 here. And yeah, really, it's crazy how much the stock has gone up. And GTA 5 still like one of the best-selling games, like in the top 10, like every month, which is crazy. So yeah, banking on GTA 6 doing amazing still too. So want to be along for the ride for that. So yeah, I'm gonna put $1,000 into Take-Two here. Review that. Cool. All right, and then I want to put another $1,000 in Hood. So yeah, of course, like given how much money I have in Hood, like I'm honestly pretty long-term bullish on them. Like it's been great to kind of see how well they execute on stuff and how hard they push on everything too. So kind of have like a first-hand view of all that. So yeah, just long-term bullish on that, and I think like over time they're going to get more and more profitable, and yeah, just do well with like stuff like their prediction markets, like keep growing the brokerage stuff and like their ecosystem there with banking and the credit card, and yeah, and then also like the tokenization that's coming down the line as well too. Curious how that all plays out. But yeah, this has kind of fallen under my cost basis obviously as I've become red here, so I want to buy into that dip as well. So I'm going to put another $1,000 there. Cool. And then, so now that's minus $2,000, right? So I have $3,439 left to invest. And let's kind of look at the high yield side of things here. So there's two things that I'm thinking about investing in today. So typically what I do is like invest in an anchor and just invest in a kind of ultra high yielder as well too. So kind of having a bit of a balance of both, right? So today, normally I would have maybe done something like TDAC, QQI, or yeah, one of those or XPay as far as like anchors, right? Given that, so if I pop over to BTCI, so Bitcoin had like a pretty rough week, right? It kind of went down to, where's my Bitcoin here? Yeah, down to 82K, 82.6K. So of course, BTCI kind of went along for the ride as well too. So it's down 7.65% on the week. Yeah, just like rough start to the year for Bitcoin. But yeah, want to buy that dip. Yeah, just continuing the downtrend of Bitcoin since October to now. But yeah, just keep wanting to buy those dips and kind of average down. So yeah, I want to do that instead of kind of like my my usual anchor buys as far as like XPay, TDAC, and QQI. So we'll add more into BTCI, so probably like 1,400 in that. And then also I'm thinking I want to still invest into like WPay, YMAX, or ULTY. So I'm thinking I'll probably do ULTY between those three there, just because again I know people rag on me for it, but like, yeah, I've been kind of impressed since their strategy change in the end of November there. And yeah, even if we kind of take a quick peek at like year-to-date heat map here, yeah, ULTY is like surprisingly up this year compared to, and it's even matching like stuff like VU or whatnot. It was even higher the other week. It's obviously kind of dropped down a bit this week, but yeah, you can kind of see here that it's holding up nicely in total return since the beginning of the year. So I don't mind getting into that. Like WPay's down year to date on that stuff. YMAX, where's YMAX here? That's down as well. So yeah, gonna do ULTY there. Just want to do like a good ultra yielder and kind of keep contributing to my monthly dividends here. So let's see here. So I'll do 2,439.82 for BTCI. Is that it? 42. Oh, 39. Sorry, 39 and 82. Double check here. All right. So 82, and then it should be 1,000 left. Cool. So buying into the BTI dip here, and cool. And yeah, and then thinking I'll buy more of ULTY. Yeah, if we look at like the current yield for all of these, I updated the estimates for this week. So ULTY's kind of sitting at like 70.94%. WPay's at sitting at 48.69%. This is like basically the 4-week average of their yields, their weekly yields essentially, YMAX sitting at 51.17%. So I think I'm gonna do Ulti, honestly. Yeah, just wanna get a bit of that ultra yielder. There's some Robinhood in there too, so I'm buying into that dip within it. But yeah, let's do that. And then Ulti, so just a little $1,000 into Ulti. So definitely like reducing a lot of like last year I was going heavy into like Ulti, YMAX, and WPay. I was doing like almost my entire like high yield buy into them. But yeah, just reducing the portion there and really want to build up my anchors like such as QI, TDAC. So that is everything. And then one thing I'll want to do here too, just to kind of like get an idea. So now everything's fully invested. So I want to get a rough idea of like how much I actually added to my monthly income, right? So if I do $1,000 of Ulti times 70.94%, so that's like basically how much I'm getting in a year from that, divide by 12. So I just added $59. And then if we do the 2489, right? 2439.82 times 0.3223 for BTCI divided by 12. So yeah, basically added $124 of a monthly income through those buys, which is nice. Yeah, that's how you can kind of calculate stuff based on the current yield, right? If you want to get a rough idea of like how you're growing. So yeah, that's all the investments. So yeah, last thing, I'm just gonna update all my numbers as well too. So Ulti, we're gonna update that. So this is average down, obviously, and then update the number of shares. Cool. BTCI. This will be a nice average down as well too. Yeah, very nice average down, and then number of shares growing here. And then for take two, this should be a nice average down as well too. Wait, which one did I grab? Average cost. And then for Hood, that should be a little average down, not as high as the others, but still Hood. And awesome. So that's there. That pushes up my gross value to $309K, $974, which is great. I'll update my margin values in a bit, just after I pay my bills to kind of see where we're at after everything. And yeah, if we pop over to my bill paying page. So yeah, there's only one bill left for this month here. So just my mortgage, just pay special there. So $2,998.31. So yeah, basically as usual, I'll just transfer that to the spending account and yeah, basically just draw that bill after the video's done. Just don't want to do that live and eat up time. So yeah, if we pop over to here, so you'll see that like the money that's withdrawable, right? If you remember what was the number before, like that basically had gone up by basically the amount of the paycheck that I sent over, 5.4K. And then now that number has gone down by half because of what I invested, right? So like when I invest basically that full paycheck on margin, basically half stays as like equity in the account as like collateral for the buys, right? So half of that is available for cash. So you can kind of see that this has grown compared to where I started at for the, I think it was like a 31K this morning, right? So yeah, we'll take that and use that to pay the mortgage here. So 299,831, and I'll send that to spending. And yeah, and also to note too, like you don't necessarily need to transfer this to the spending account. Like the Robinhood brokerage account does have direct deposit information, so an account and routing number. So you could technically even draw the stuff out of it. And honestly, sometimes I debate whether I just do that and not having to do this all the time, right? And everything's just like automated and just drawn from the brokerage. But for now, I kind of just like doing this. I'm weird and manual like that for certain things. But yeah, we'll just transfer that over. Yeah, that'll be the mortgage. Great. So yeah, after the video's done, I'm just gonna go to the mortgage website and draw this amount essentially, right? But yeah, that's everything invested. You'll see that number dropped because the mortgage came out, right? So to note is that like when I pull out the mortgage like that, so what the key thing is that this gross value doesn't change because I'm not selling anything. The only thing I'm doing is taking out more margin, which only reduces the net value here. So that's the key thing. Like if I didn't invest everything I just did and then just pulled out money, then that would be kind of swapping money in buckets. But because I invested it, I'm growing my gross value and then I'm taking a loan against that full gross value and then paying a mortgage, right? So it's not quite just like switching buckets, the money hands like people think sometimes. So yeah, let's just update my margin numbers here just to see kind of where we're at. So you'll see that margin total grew by how much I put in, right? And then also minus the mortgage. And then my margin used has gone up essentially because of the mortgage payment, right? So where does that leave us after all that? So right now I'm at a $309,638 gross value. My margin used is sitting at minus $154,656, and my net value is sitting at $154,981. So how does that break down as far as the assets? So like on the growth side of things, I have $170,466. So that's basically all these combined, right? Everything in white. And then on my high yield side, I have $139,171. So all the things in gray here, right? So that gives me an equity of 50.05%. So definitely kind of inching towards that 50% equity. I'm gonna have to monitor this. If there's like a week where I dip under that, like that, what might happen there is that maybe for that week, Paycheck might actually just kind of just deposit to cash, honestly, just to kind of help get this back up and I mean above 50%. But for now, yeah, my margin buffer is sitting at 24.60%. So this basically, this full value, right, can go down this much before I trigger a margin call at 78.8K here. So, but still a healthy margin buffer overall, right? I have like a $76,180 margin buffer between my net value and my margin maintenance here. So that's thanks to my blended margin maintenance here, which is very favorable on Robinhood, the 25.45%. So that's basically the blend of like all these, right? Most is 25%, then like Misty's 35, GOW's 30, and WPay's 30% because they're leveraged. But yeah, so yeah, that's gotta love Robinhood's margin maintenance is there. Keeps it a lot safer as far as the margin health. But yeah, but also still it's margin, so it's risky. So yeah, that's where stuff is sitting at. If we look at like the dividend yield, so like I said, that's kind of gone up. I closed my calculator here by $120 or so. So now my monthly dividends are sitting at $4,590 a month. Roughly, that's giving me a 39.58% distribution essentially. So if I just go off only the assets that are invested into high yield income, it's the 139,000. That's my yield that I'm getting for all my investments in there. If I go off the full value of the portfolio, it's actually like 18.56%. So if I go over like the full like 309,000, right? So yeah, that's where the portfolio's sitting at after that full investment. So yeah, hopefully you appreciated seeing this step by step, nothing hidden. Yeah, seeing it all happen in real time, right? Yeah, so as far as the next video, so I'm going to be posting this on Saturday because I got to edit this on Friday evening and stuff. But on Sunday, tomorrow, I look forward to a portfolio update covering this week's portfolio news and performance. So yeah, you'll get the usual updates there. Portfolio news, performance, finance video of the week. So look forward to that. And yeah, that's the video today. As usual, if you want to follow me off YouTube, there's a bunch of different ways you can kind of do it. You can do it on Blossom Social here. You'd see all my trades. Like, yeah, this morning I did a little buy of gold with some Apple settlement money that I received from Siri spying on you, essentially. So we got, yeah, $40.10 there. And yeah, you can also follow my Snowball portfolio for free here. So yeah, you can kind of see the breakdown of like all my different buckets, right? Of like how those are sitting. You can kind of see like all my total profits on stuff. Everything's exposed, nothing hidden. You can see all the same stuff that I'm looking at essentially. There's also my Patreon too, if you're interested. This is really just a backup in case there's more shenanigans on YouTube. So I upload all my videos here, day and date ideally, and all my full backlog between both channels. And then also, of course, there's the Discord. So yeah, get my trade alerts on here as well. So you have like that gold bio I was talking about. Yeah, love talking to community members in between videos. Like Foxhound here and some others have actually confirmed that like sounds like Drip and Nav is actually coming to Robinhood. So maybe in the next 3 to 12 months is what support said, which is cool. So for those that are invested in CLM, CRF, or like GOF, like that's promising. So yeah, once they add that back, maybe I might consider reinvesting in these. We'll see. I wasn't a fan of like having to deal with the rights offerings and things like that, but like maybe even something like GOF might be interesting given its 5% premium. But we'll see. We'll see when the time comes. But yeah, that's the video. If you got some value out of this and you're hoping to follow along, yeah, just give me a like and subscribe. Hit the bell notification if you want to be notified about future videos. And I'll catch you in the next one. Peace.